What is good, everyone? Welcome to lesson number 1, episode 1 of the 1% mentorship. Today, drum roll, please. We are going to be going over the Mech model, my Mech model that I created. Okay, so this is going to be covering the Mech model, which is basically just an inversion for value gap, targeting an unfilled 5-minute or 15 minutes. So we're going to go over all the rules for it, stop loss, what you need, how do you get a higher win rate with it, how do you trade it with, the way I trade, which is around a 70 to 80% win rate. And let's get into it. So, this is going to be a lesson number 1. Guys, this is going to be a lot of sauce, all right? This mentorship is going to have a fuck ton of sauce. Please try to not get overwhelmed. If you need to just watch one video a day, do that. Don't scroll through all these videos super fast. Watch like one video a day. Journal, write your notes, do your homework that we're going to assign to you. And then from there, you can watch more videos, and then from there, you can keep rewatching the videos if you get confused. Or you can also join the Q&A calls that we host twice a week and ask your questions there. So, yeah. That being said, though, this is all you need to become a profitable day trader. Everything in this course I'm giving you guys is everything that I know and everything that you need to know. Nothing more, nothing less. Okay, I'm not going to give you a bunch of bullshit ICT concepts that I actually don't use. No, I'm giving you literally everything that I know. Okay, so first off, just want to shout out my boy Luca. Recent testimonial I saw. And this is just 1 year worth of data on the Mech model. Oops, I don't know what happened there. But yeah, he had a 72% win rate. All right. Who's ready? Me. Let's get into this shit, all right? So, let's get into this. All right, so the Mech model. Starting off with our rules, okay? So the Mech model revolves around rejecting first a higher time frame key level. So this is going to be any liquidity pool or PD array, okay? So a higher time frame key level, what does that look like liquidity-wise? That's going to look like Asia lows, Asia highs, London session lows, London highs, that time-based liquidity. So that can also be previous day low, previous day high. Other prominent liquidity pools are just like very obvious lows or highs inside of gaps. So, that hourly low inside of a gap, that hourly high inside of a gap, right? So let's say we have a bearish rally gap right here. If we have, let's say a low that gets printed here, okay? This is going to be a very prominent liquidity pool. So you want to see price sweep this and then trade higher, okay? Now, also, so that's all key levels, right? So I would say like the 15-minute time frame and higher is going to be your higher time frame key level. Also, what you want to be paying attention to is PD arrays, right? So that's going to be your fair value gaps. Any PD arrays are basically just fair value gaps, order blocks, breaker blocks. Really, that's it. Like really any ICT concept, okay? So just mainly pay attention to, though, fair value gaps and liquidity. That's really all you really need. For like more accurate entries, there's obviously going to be like those breakers, BPRs, that sort of stuff. But just focus on fair value gaps, okay? And again, that's going to be like 15-minute high time frame or higher, okay? Now, again, you're going to want to then focus on, next up, your highest time frame inversion, okay? So inversion for value gaps is something that we teach every single day. So hopefully you guys know already how we trade inversion for value gaps. But how it works is you look at the highest time frame in the leg, okay? So what this means is, let's say, for example, let's look at this leg right here, okay? Haven't looked at this yet, so I don't know if it's going to be clean. It's not like beautiful. We can just do like the short from this morning. Okay, so the short from this morning, right? There is, this is like not clean price action. Let's just do this, okay? Fuck it. Let's just do this, okay? So from this low to this high, right? You're gonna want to look at the highest time frame for rally up this leg. So there's a 1 minute here. Is there a 2 minute? Yes. Is there a 3 minute? Yes. Is there a 4 minute? Yes. Is there a 5 minute? No. So the highest time frame here is this 4 minute, and I'm using the 1 minute to 5 minute time frames. Okay, I'm not going higher than the 5 minute, but this is the 4 minute, so you're gonna wait for this to break, and this unfortunately doesn't give you an entry on this trade. But waiting for the highest time frame to break is going to give you the highest probability conditions. And this wouldn't have given you an entry even on the 1 minute either. But yeah, that's what you want to be looking for, okay, when I'm saying highest time frame, okay? Now, going on to, where are we? Hello. Okay, so that makes sense. Cool. Next up, I have don't trade against an SMT, okay? I see this really lowers the win rate a lot when you are trading against an SMT, especially because the Mech model, it can be, a lot of reversals happening, so it is a little bit sus. Now, this is what I'm looking at, right? So let's say the high is here, right? So this is your unfilled gap, right? Your unfilled 550 minute, okay? So if we have an SMT here, this is not going to be valid, okay? And ES is like here, NQ is like here, okay, then you're not going to take that, okay? You're going to wait, and you're just going to literally just fade the trade, okay? Now, again, the Mech model is targeting an unfilled 515-minute gap. Can you target a 3-minute? No. Can you target an hourly? No. Now, that's going to be like more discretionary trading if you're, a little bit more experienced and you get the hang of the Mech model and you get the hang of overall trading with, more confluences and things like that. Then you can start targeting, unfilled hourly, unfilled 4 hours, stuff like that. But just the overall Mech model that you're going to see basically get presented almost every single day is an unfilled 5-minute or 15-minute. Okay? Then stop loss placement is going to be at the swing low, fair value gap low, or OB. I'll go over all that soon, don't worry. And then break even is going to be at your unfilled gap, or you're going to TP if it's a 1-to-1. Okay? Now, again, with the Mech model, it's not going to be very high RR. That's not what we're going for. Usually with higher win rate strategies around an 80-ish%, 70, 80-ish% win rate, your RR is not going to be that good. So the majority of the time, you're going to have probably like negative RR, and then you're going to have to hold until you hit that 1R, even after the 5-minute or 15-minute gets tapped. So that's just something you have to be aware of. But yeah, let me first show you what it looks like, a little example on some drawings, and then I will get into the actual charts, okay? So first off, we have just rejecting a higher time frame key level, right? So we swept out previous day low, and then we hit a bullish hourly fair value gap. Beautiful. Now, I'm then looking at the high to the low of the leg that created this unfilled 15-minute gap. Unfilled 15-minute, this is also referred to as an unmitigated gap, right? It's just a fair value gap that doesn't have any candles in it, okay? So, for example here, this is unmitigated. This is unmitigated. This is mitigated because there's candles in it, okay? This is mitigated because there's candles in it. I don't think I need to go too in-depth with that, but hopefully you guys do understand that, okay? Now, I'm looking from this leg to this low, this high to this low, right? This leg, the highest time frame inversion of this leg. So if there's a 5-minute, then I'm going to take the 5-minute. If there's a 3-minute highest time frame, I'm going to take the 3-minute. If there's only a 1-minute, then the 1-minute is the highest time frame, and that's completely valid, okay? Now, from here, once we get that candle closure, right, depending on the candle, how it closes, I'll either limit order this at the inversion, or I would just take the entry here. Now, let's say the candle closed like basically up here, then yes, I'm going to wait for a limit order because the R is just like not good. But the majority of the time, if I'm accounting for, 10-ish points on the close, that's usually what I'm accounting for about, then I would just simply market order it. But yeah, all right, so unfilled 15-minute, again, highest time in this, and there's no SMT, right? So let's just say there's no SMT here. And then I'm going to target that unfilled 5-minute or 15-minute. This is, in this case, an unfilled 15-minute. And then my stop loss at the swing, fair value gap low or OB. Okay, so what is a fair value gap low? Okay, so I'll show you what that looks like. And I'll show you what an OB looks like. Okay, so break even at unfilled gap, stop loss swings, right? So this is your swing low, okay? So let's say, for example, I was taking this short here, right? So your swing, okay, is just simply this high, right? You guys know what a swing high is, okay? So this is just your high. Now, right, so this is your placement here. Let's say you're taking this inversion and you're shorting here. Your stop loss can be at the swing. Now, let's say this isn't so much of like a top tick entry. Let's say the entry was like down here. Let's say you're just entering here, right? Your fair value gap high is going to be here, right? Which is also probably going to be a swing. I wouldn't really recommend most of the time putting it here because sometimes we can still wick this fair value gap and then it would still be valid. So I would suggest maybe even putting it a little bit higher, but that's what a fair value gap is, right? This 3 candle pattern, you guys know what it is. So the fair value gap high as well is a good stop loss. For example, like here, put the stop loss like at this low. But yeah, that's what it looks like, okay? Now, let's go back to our drawing board here. Okay. So, stop loss at swing, again, for value gap low, or OB, okay? So, OB, what is an OB? Okay, so an order block is just for a bullish order block, and again, I don't really need to make a whole entire separate lesson on OBs. I did in the previous mentorships, but I realized it was just a waste of time and a waste of a lesson because it really can be explained very quickly. It's essentially where we have, in a bullish scenario, a red candle sandwiched in between 2 greens, and then a bearish order block is a green candle sandwiched in between 2 reds. Okay, so a bullish order block, what that looks like is right here. So we have a red candle sandwiched in between 2 greens. Now, it only becomes an order block once this 3rd candle, which is a green candle, closes above the wick here. Okay, so we do that, and that forms an OB, which ends up sending price higher, right? And this should get respected. Now, a bearish order block, what that looks like is a down close candle, right? That gets closed below a down close candle sandwich in between 2 greens. Okay, so trying to show a good example here. Very choppy price action, but yeah, I mean, we can just like literally just mark them all out, I guess. So this is a green candle sandwich in between 2 reds. This is your bearish order block, right? This ends up getting respected. And how you draw out order blocks is you can draw it out like this. You can draw out the whole entire candle. I like to draw it from like from the wick. Now, when I'm setting my stop loss, I'll use the whole entire candle, right? So let's say I was just going long here. I would place my stop loss at this order block low here, and I'll use the whole entire order block, okay? So whatever we have, now it doesn't really matter. I mean, usually with the time frame I'm trading on, for example, if it's like a 5-minute inversion, I'd want to be using a 5-minute order block, things like that. But sometimes I will go down on the lower time frame and set lower time frame stop losses because I do want more of an accurate entry. Maybe I want better RR. So that's just something to be paying attention to for sure. Anyways, yeah, that being said though, right, let's move on to what a bearish how deep are we? We're about 13 minutes. Okay, bad. Let's go to what a bearish Mech model looks like. Okay, so what a bearish Mech model looks like is we have a sweep of some sort of buy side liquidity. So that can be London highs, right? That can be Asia highs, whatever. In this scenario, we have London highs. We then tap into a bearish 15-minute fair value gap. We then have, let's say, a 3-minute IFEG being the highest time frame from this low to this high. And then we have an unfilled 5-minute. Now, a lot of the times, guys, if I don't have like too much of let's say I'm not like too confident price is going to go all the way down here. And for this example, right, this isn't a 1-to-1. Okay, so we don't have a 1-to-1 RR. So what I'm going to do is just hold this until I hit a 1-to-1, and then I'll just full TP. Or I can take profit 1, and I can leave a runner for the sell side if I'm super confident. Again, if this is like a very obvious draw of liquidity, that I'll leave runners. But if not, then I'll just full close there. Okay, so that's that. And we have equal lows. We have sell side, and again on this scenario, let's say we had like an OB, then I could probably put my stop loss here. Or let's say we had a move like this, and then we had a fair value gap that got created. I'll put it there. Right, but in this scenario where I'm literally top taking this, I can put it at the swing high, as long as my R is good, right? And that's that. All right. Now I do want to hop into 3 examples. One being a trade I took today. Let's get into this. Okay, so we had this at 240, and we had sell side liquidity resting here. This was some sort of news candles that were dropped, right? So this was news. I don't remember exactly what news it was, right? But this was data highs, and then we also had data lows here, okay? This is in probably like some more news that dropped. I'm not entirely sure. But prominent sell side and prominent buy side, right? We then had a sweep of this sell side. So that's step one of identifying the Mech model, sell side sweep. Now, do we have an unfilled 5-minute or 15-minute gap? We have an unfilled 5-minute, right? So basically the whole premise around the Mech model is price likes to rebalance the range after some sort of sell side or buy side is swept and after we've hit a higher time frame key level. That's all, ICT trading is we're just simply bouncing off of PD rays, and we're bouncing off of different key levels to then send us to other key levels, right? So if we are going to be truly bearish here, right, then we should bounce up first, rebalance this range, and then we should continue to dump from here, right? If we are going to be truly bullish here, we should trade up to this 5-minute, disrespect it, and then trade higher towards this buy side. Now, the beautiful thing with the Mech model is that we are taking an inversion, targeting this unfilled gap, and let's say that this is bearish, right? And we're still in bearish structure, and this isn't like a true sell side sweep, and this is just a continuation model. Then what you can then look for is for price to just simply hit your break even. Or if it's past a 1-to-1, right, and maybe you get a little lucky, then boom, you get a 1-to-1, and then you get stopped out. But then, actually, you don't get stopped out, and this looks like a, but you don't get stopped out, right? You secured your profits at a 1-to-1. So depending on what your confidence in your next drawn liquidity is you can either hold or TP. Now, in this scenario here, I did hold because I was really confident in this data highs, as well as what is this? Also an unfilled 5 minutes. We had like relative equal highs, another unfilled 5-minute above. Beautiful. Absolutely beautiful, okay? So from here, we had our Mech model, okay? So this is a 1-minute inversion, right? So is there a 2-minute in this leg? No. Is there a 3-minute? No. Is there a 4-minute, 5-minute? I don't need to show it. There is not, okay? So in this scenario, we had a 1-minute. So this is already good RR, and there's no order block, and there's no fair value gap lower high to put it at. So I put my stop loss here at the swing low. Now from here, we have this unfilled 5-minute. This is where I go break even. I don't go break even before. I don't go break even after, okay? I do go break even after, sorry. So once this 5-minute gets hit, right at this green candle here, I then move my stop loss to break even. And I hold my contracts towards this high. And as you can see, since we were bullish here, we did disrespect this gap. Now, again, this is really awesome because we don't have to wait for this to get disrespected first, because what's most likely going to happen, well, we're probably not even going to get a trade, right? We don't even get a trade here. There's no close that's even valid on the 5-minute time frame. But we were targeting that. We were already in this, and we were already break even. Right? Making this a beautiful Mech model. Okay? So, again, this pretty much does get presented almost every single day. Unless it's days like really bad price action. But we are always going to be rebalancing some sort of range. Okay, so I'll show you the example on Friday. This is a trade that Patty took. This is a very, very clean setup. Okay, so this was around 9 a.m. What do we have? We have a prominent liquidity pool, right? What did I say about this liquidity pool, guys? This low inside of a fair value gap is a very, very prominent liquidity pool, okay? 15-minute intermediate low, okay? And on the hourly time frame, this is an hourly fair value gap. What is this also, guys? An hourly order block, right? OB here as well. Okay. What else did we hit? I believe that's all, okay? We also had some liquidity here that we did end up sweeping. Hold up, my dog's fucking barking. All right, so I don't know where I left off. Had to do something really quick, but I'm back. All right, and we're gonna go over this trade that Pat ended up taking. Right, again, we swept out this 15-minute intermediate low. We already went over this. We hit this discounted hourly gap. Okay, now that's the first step of identifying the Mech model, is seeing that. All right, now we have an unfilled 5-minute here, but is there really any entry towards this? All right, and this is also a pre-market, so I'm looking And there's no unfilled fair value gap. I mean, there's no fair value gap and inversion really to take here. That's just not obvious. And this is before market open, so this is not something I would take even. Now, there's unfilled 5-minute. Now, this already got traded to, but what is there also? An unfilled 15-minute, okay? So, unfilled 15-minute, we're rejecting higher time from key level. Now, how I'm going to play this, and how Patrick played this, was if this fair value gap does end up getting inverted, then you can target that unfilled gap, and then you can leave a runner towards this buy side liquidity, okay? All right, that's the Mech model. You target the unfilled gap. We sweep liquidity again. We then get a close here. This is a very bad close, right? This is not the best RR, and you're most likely getting break even. So what do? You set a limit order here at this inversion. Tap it. Boom, you're in. We hit the 15-minute there. You're break even now. Leave a runner to the buy side, and boom, over a 1 to 2 RR. Now, stop loss placement on this one, okay? So I'm going to be putting a stop loss on this trade at the OB. So I'm scrolling through time frames here, and there is this 2-minute order block right here, right? Because we have a red candle sandwiched in between these two greens, and we close above it at 9:36. So at this point, this is a bullish order block, right? So this all right here is a bullish order block, and price is going to bounce off this, respect it, and that's where your stop loss should be. So that's around actually a better RR, like almost a 1 to 3 RR there. Now, after this, what do we also have? Okay, we have another Mech model present itself, right? So we swept out buy side. We end up making another run higher. And what do we have here? Okay, so this isn't like the best Mech model in my opinion, because when you're looking at setups, okay, specifically really just for any setup that I'm going to teach you guys and any model, just the way I trade in general, you do not want to be seeing like displacement like this above buy side or sell side. You want to see us sweep out these lows. Like this is going to be a much cleaner move than move like this, right? And I'm going to show you why this only ran for like 1 R here. Because of all the displacement that we had above this, it's just going to be harder to short towards. And this is not like a clean soup is what it's called, but a clean like liquidity sweep, right? This is more of a liquidity sweep because we don't have really any candles that are closing through this. We keep wicking it. Versus this, we're seeing a lot of displacement through it. But nonetheless, basically just this is still the Mech model, right? And if you're trading this very patternly, this is still the Mech model, okay? So here we do have an unfilled 5-minute gap right here. All right, so your unfilled 5-minute gap is right here. I don't know why I drew it over there. Maybe that's a 15-minute, who knows? But this is your unfilled 5-minute gap that gets created. We then have a 1-minute inversion right here. And you can enter short here. Now, this does end up being a break-even trade, okay? So I'm showing you guys how to actually save yourself in trades like this, all right? So this is your 5-minute. And this does end up being a break-even trade, okay? But you would go break-even once we hit this 5-minute, okay? Because if we are truly going to be bullish, we're most likely going to bounce off of this and then run higher. If we're going to be bearish here, we should displace through this, okay? Now, I think this just like is a bad, yeah. I mean, you could also re-enter this though, but I just honestly like longs better here. But I'm just showing you guys what the Mech model just looks like over and over again. Okay. Maybe you could have gone a Mech model short here. Nah. But yeah, that's what a break even looks like. Those are what 2 winning trades looked like. And that's basically a Mech model. I mean, I could keep like looking for it and probably find it. Like something probably here is this is probably a Mech model somewhere in here. We have an unfilled 15-minute gap. And we're looking at this leg from this low to this high. Do we have any rally gaps? What's the highest time from this leg? A 4-minute, right? So we have a 5-minute? No. Do we have a 4-minute? Yes. So you're waiting for this 4 minutes to break. Oh, see, the close there was just so bad. That's so unfortunate. But if you got a better close there, then this would have been a valid entry. But yeah, that's the thing with Mech model. Like, you're going to sometimes get like a really obvious close and entry and you're going to be chilling. Sometimes you're not going to get that obvious close and entry and you're just going to have to cry about it. All right. But yeah, you can also be targeting, like, this is just going to, you know, implement unfilled gaps in your trading. And you can start implementing that into things like this. Like, you know, you can target this as an unfilled gap, or there's an unfilled gap here. This can be your target. And then look at this TP, right? Doesn't go past that, right? So unfilled gaps and unmitigated gaps are always going to be a great place to be taking profits. I also want you guys to note that there's going to be times like in the Mech model where we have multiple for rally gaps in a leg, like 1 5 minute here, another 5 minute here, right? And you're taking a reversal, targeting that because maybe we've hit some sort of higher time frame key level. Now, you can go break even, right, once we hit that unfilled 5 minute here, but I would TP once we hit EQ of that range. So once we have an equilibrium in this range, that's where I would go TPing at, and then leaving runners for external sell side, okay? So that's just something to note, to always also be drawing out EQ of the range with your unfilled gaps. And also that you want to be following like a daily bias, an overall narrative when trading with the Mech model. You don't want to just be completely pattern trading it, but with these rules, it's going to be, you know, a little bit harder to pattern trade. I don't think it's like that pattern tradable, I guess. But yeah, all right. So I want to find like one more example to really implement this into your brain. Okay, looks like there's a Mech model here. We got an unfilled 15 minute. All right. Oh my God, the same thing this time. Well, maybe there's a. Oh, this is really clean actually. Okay. So we do have an unfilled 15 minute here, right? We did sweep out higher time from liquidity here, being this 4-hour high. Now we do have recent internal liquidity made here as well, being this high. We end up trading towards this internal liquidity, and then we get a 1 minute inversion right here. We also get a 1 minute change in state of delivery. And then you can take your short here, targeting this unfilled 15-minute gap right here. Okay. Short this. And there you go. Wasn't like the cleanest example because this is in what time is this at? This is in London session. I don't usually trade London session. But yeah, these are just some examples of the Mech model. And the Mech model again is just targeting an unmitigated gap. But that being said, that's pretty much everything. I mean, I'm gonna just give a quick recap of this, and then we'll get into the conclusion, and I'll give you guys some homework as well. Okay, so again, Mech model is you are rejecting a higher time frame key level. So PDRA, what does that look like? We have a 1 hour for rally gap, 4 hour for rally gap, daily for rally gap, order blocks, right? We went over order blocks. You can also need to be rejecting liquidity. This is an and or. You don't always need to be having both, but when you have both liquidity and a PDRA being rejected and bounced off of, it's going to give you a higher probability setup. Then you have the highest time frame inversion of the leg, right? You look at the low to the high that is from that unfilled, unmitigated gap, and you take the highest time inversion of that from the 1 minute to the 5 minute. And then you also have don't trade against an SMT. So if we have an SMT here, let's say ES took this already, then you're not going to be taking this long because this is most likely going to be some sort of soup, and your drawn liquidity is most likely wrong if we form this SMT. Obviously, there's going to be times where I personally do fade it, and I do think, you know, you can start building on that conviction. Maybe you take this with lower risk if you have really high conviction higher, but if you just have high conviction to that unfilled gap and not anything higher or lower than that, then I definitely wouldn't suggest, you know, trading against an SMT. So it really comes down to screen time at the end of the day, but just for safe measures, don't trade against an SMT. Now we also have targeting an unfilled 5 minute or 15 minute gap. That's just going to be your simple rules here. And then your stop loss at swing low for rally gap lower or B. We went over that. And then your break even at unfilled gap or UTP if it's at a 1-to-1. Again, the majority of the time, you're not going to have the best R with Mech model, so you can just break even at a 1-1, then leave that runner. Runners are also great if you're super high, if you're super confident in those external TPs. If not, though, it's great to just TP at that 1-to-1, or just, you know, around a 1-to-1, 1-to-2, wherever that next maybe internal draw is, right? But yeah, that being said, that's gonna wrap it up for this lesson, which is just basically the mechanical model, okay? Hopefully you guys did enjoy this lesson. And I will see you guys in the next lesson. If you have any questions on this, feel free to pull up to the Q&A to ask whatever questions that you may have on this lesson specifically. Just be like, hey, Blake, for the mechanical model, I didn't understand your stop loss placement. Can you go over it again? Sure, right? And please ask it. Please don't be scared to ask questions. All here to learn, and I'm sure that the other person and another person has the same exact question as you, okay? So we're all a family here. Or you can hop on stage, right? We're also going to allow people to just hop on stage, so yeah. All right, I will see you guys in the next lesson. Peace out.